1st September 2023, Friday, MAO with Cal. Now, September has always been the most volatile month, right? Volatile can be upside, can be downside. But based on the statistics, we see that September usually more towards the downside. So this is a must-watch video. Let's go into details, guys. All right, first of all, disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship. Now, first of all, tonight, NFP is coming up, right? We do know that NFP is expected to be status quo. The market looking at 170,000 jobs from the public sector. All right, that's lower than the 187 last month. The unemployment rate looking at 3.5, but I suspect this will be 3.6. Now, the ISM manufacturing PMI, 47.0, slightly higher is the expectation, but I feel that the number could be lower. So all this is looking to the downside. Now, one thing to note is that the PCE data came out to be 4.2%, which is higher than the previous month. So initial jobless claim has went down last month. So that actually shows that the strength, the job labor is still there. So that means that the Federal Reserve have a lot of room for them to continue the rate hike. But apparently, this guy, Raphael Bostic, right, he is from the Atlanta Fed president. He's considered to be hawkish, but yesterday, he came in and said that the US interest rate are high enough. So it became dovish. What's going on, right? This guy has been rather hawkish, right? So because of that, the market rebounded on this. The question is can this sustain? To me, it's all right. Very important. You can see the 10-year yield right now has came back down. That's the reason why the stock market recovered the last 2 weeks, because the yield came off. But if you resume the upward trend, there is a very high chance you can see the market going back up again, which I feel that it will go to the 4.5% level by the mid of this month. All right. So now we are 4.14, 4.11, in fact, for the 10-year yield. I suspect that we'll see 4.5% later this month as well. And of course, if that happens, that will pressure the stock market. So apparently there's an article going on. So a stormy September for US stock may lie ahead. So why is that so? Because apparently September is known to be one of the worst months. Okay, so let's take a look at the numbers right now. You can see statistically, you can see that in the month of September itself, right, usually the percentage net change since 1944 until to date, right, that is more than 70 years of history and data. It seems that September month usually don't go well, especially if August month has been pretty good. And that's the reason why right now, you look at CPI data, that basically we put it between the 1970s to the current level now, it is actually going in tandem. So are we going to see a high inflation coming in, which I really believe so, because you can see none of the prices coming down right now. And if Federal Reserve continue rate hike, because to combat inflation, this will push up inflation again. And that's one reason why the CTAs are actually exiting from the market. You can see the exit from the S&P and the NASDAQ. Now, it could be over profit taking, it could be overbought, but still, when these guys are getting out, you don't expect the market to go any higher, right? So billionaire investors Jeff, he actually came in and said this on CNBC. We are at the first inning of the commercial real estate correction. Now, we know that in China, it's already happening right now. So would that spill over to US? It is actually very possible. In fact, itself, right, he is quite confident, and I watched this video about 8 minutes long. It does make sense, and I feel that, right, he's probably right. And he made a lot of money back then and stuff during the 2007 crisis. So all I can say is, this is the S&P currently right now. Now, it's firmly at the moment now above the 200-day, the 30-day moving average. So by staying above it, that means that the market is still okay. Now, 44.80 is the very important support level to watch out for. So everyone put it down, 48.00. That's a very critical number for the S&P. Currently, right now, it is trading. Sorry, 44, yeah, 44.80. My bet here, 44.80. Okay, currently now is at 45.07, so about 27 points away. If the S&P stays above 44.80, the market will likely still stay on the upside. But if the market breaks below 44.80, selling is expected to come in. So right now, you can see this is the Volatility S&P Index, right? You can see how it goes. You can see very, very clearly that during the September period is one of the periods whereby usually it go parabolic upside. Of course, in October, we also know it happened before, like what happened in 1987, the Wall Street crash. But we're talking about a more consistent one will be in the month of September. So if this is going to happen, if volatility is expected to come in September, then of course the market is going to be all the way up or all the way down. So there will be some movement coming in for sure. Now, where are we right now, right? If we use the seasonal pattern for the S&P since the last 25 years, you do expect the market goes sideways a little bit before it starts to come down towards the month of October. And the first 2 weeks of October, usually we'll see some profit taking further, right? And that was what happened back in October in 1987. So to me, as our traders, you need to be very careful because this is a very important point that you can actually buy low and then sell high later, all right? So look at it right now from 1990s to now, okay, you can see that this is the VIX. Now, usually VIX itself is basically to track the volatility of the market. And you can see in September month itself, right? September and October, this 2 months basically has one of the highest average, right? 20.7 to 21.9. So which means that there will be a lot of volatility. The market will be really going up, going down. So you really need to know exactly what to do. And that's the reason why I've been preparing my students on how to use this thing called KCB to know that how to make money on a regular basis. So that's something that you need to learn. And with all this information itself, you look at back to VIX back then in 2017. Now remember, back in 2017, the VIX was just trading, okay? It was just literally trading around this period of time between 8 to 13. Then suddenly out of nowhere, it's all right, the VIX actually shot up all the way from the 17 point to 40 to 50 level, all right? And of course, again, it did happen back in 2020, but that was pandemic. So now the thing is this, we are back to the same level, almost there. Could we see the same spike coming in? And if that spike do come in, is it because the stock market is going to come off? Well, traders and like myself, we're all waiting. So let's look back into what happened in 2017. Now, in 2017, the -1 time X short VIX future strategy was very popular. Everyone was shorting the VIX. Can you see that? So every time when the VIX go up, they short. So every day, every month, you're doing that, and it profited because at the end of the day, the VIX was down. But suddenly in 2018, you can see right here, the VIX just shot up because I think it was basically a being entrapment, all right? A lot of the VIX short sellers was being pressured, and of course, the market just rallied up all the way, and of course, that really killed a lot of VIX traders. So if you look back again now, this is something happening again. 2017 versus 2023. Oh my goodness, look at it. It's tracking exactly. And if this is going to happen, are we going to see the same spike up again in September to October? Now, that's what we are actually looking at right now. So traders, you need to be very careful for the month of September. Because remember in 2018, when the VIX shot up, right? What was crazy was a sharp fall in the VIX itself. And of course, that basically the exposure was really very big. And of course, when that all happened and so what happened to the stock market really plunged. So in 2018 as well, we saw selling in the stock market whereby the market went down as much as 4% in an intraday. I remember that one day the Dow went up by 1,600 points, right? So what actually triggered it was a jump in the yield of the 10 years. That's the reason why I'm showing it to you, because it's a key indicator to track the inflationary pressure. And then it's all right, it's only 2.9. Now, where are we right now? We're much higher. So would it be the same thing happening? So back here is all right, to show you a chart, the market was basically accelerating very nicely all the way, and it's like no way to stop it. And in fact, it closed near the high back then. So back then, remember in 2017, everyone was very bearish, but the market kept going up. So many people gave up and turned long right here. But the thing is this, when 2018 came, my God, the market pulls back. And don't forget, back then itself, right, when the market was trading here, it was really far away from the moving average. And many people say that this wouldn't come down. But you can see the market really pulls back and came back down to the moving average here. So why am I saying that? It's also because we are seeing something very similar going on right now. If you put the VIX back again, you will notice the VIX is trading between 10 to 12 back then, with the RSI for the Dow Jones at about 80 plus above. And of course, that was where the VIX was sideways. But when the market came down, the VIX just shot up all the way to 28, 30 level. So we bring it back to today right now. Oh my goodness, we have something similar. The VIX is bouncing around between 13 to 16. And the RSI is not a high, but definitely we are very near the moving average. So again, in my perspective, it's all right. We're likely going to see either a 36,000 or see a 33,000. So I write it down for you guys. Upside target will be 36,000. All right, 36,000, that is the upside target. The downside target can be as low as 33,000. So where are we right now? We are now trading at 34,700, really at the mid-drift of it. So it's upside 1,005 points, downside 1,005 points. So is it possible? Well, it's all is possible. So all we need to do is just be careful, trade according to the rules, and make money from the market. Hope you like this video. Like and subscribe and share to your friends. It's Kel signing off. Take care and have a great weekend. Bye-bye.